Hello and welcome to another Stablecoin Tuesday, and today we're looking at, well, the one that kickstarted the whole thing off. If we go back, we see this tweet by Kwon, by my hand, DAI will die. The whole kind of adventure with DAI was basically, from Kwon's point of view, he wanted to kill DAI by creating the 4 pool on Curve, which was a competitor to the 3 pool, but instead of there being DAI in that pool, he was going to use Frax and a few other stablecoins, including UST, USDT, and USDC, to create the ultimate stablecoin pool on Curve. Oh, doesn't that look foolish right now? He also made a bet. So this was the bet, the $10 million Luna Twitter bet. So AlgoGod said, who wants to take a $10 million bet that Luna will be lower price in 1 year than now? And then Gigantic Rebirth, interesting, same bet for $10 million, would donate half to charity. And then Kwon said, yes, would prefer, yeah, said cool, I'm in. So who's going to win here? Where does Luna trade at? Let's say St. Patrick's Day 2023. Oh God, doesn't that look just so off key right now? So anyway, today is a chance to take a look at MakerDAO's DAI stablecoin and why it is still definitely not dead. Kwon completely failed in his attempt to kill it, and why that was such a stupid thing to do in the first place, because DAI is kind of amazing. And if you don't understand how amazing it is, hopefully after this video, you will. But first of all, we of course must hear from our sponsors. Is your crypto sitting idle without earning you any passive income? On Nexo, you can maximize the value of your crypto in no time and earn rates of up to 17%. Their web platform and mobile app are super easy to use. You can buy crypto with your card instantly and start earning interest paid out daily. The Nexo exchange has over 300 market pairs. Every time you swap or buy crypto, you get up to 0.5% cashback that's automatically added to your wallet. If you want to finance buying a car or a trip to a faraway place, you can borrow cash by using your crypto or NFT as collateral. You don't lose your crypto, and you can get borrowing rates as low as 0% APR. Nexo has over 4 million users worldwide, and their platform is equipped with a top-quality security infrastructure designed to ensure maximum protection of assets at all times. Go to nexo.io and get started today. Decentralization of Ethereum gives us security, Layer 2 protocol, Arbitrum gives us low-cost transactions, TracerDAO's perpetual pools gives us liquidation-free, long-term leveraged tokens. The combination of all 3 of these unlocks the full potential of DeFi. Using Tracer, you can take long or short positions with leverage to trade anything: commodities, cryptocurrencies, equities, even NFTs. Dive into perpetual pools at tracer.finance and learn more about this exciting release with The Voyage, a 6-week journey in Tracer's perpetual pools to earn TCR rewards and explore the potential. So MakerDAO, DAI. When it first came out, it was a revelation, really. It was an Ether-backed stablecoin, which seemed like a complete nonsense at the time because Ether, of course, is highly volatile. But you have to remember, this was way back when. This was the birth of DeFi, effectively, with MakerDAO. It is the OG of all OGs. Even the idea that you could have a stablecoin that would be backed by a volatile asset like Ether is just so bold. But it did kickstart a complete revolution in DeFi. And DAI has grown and grown and grown in market cap to the point where it's genuinely challenging with some huge names, not necessarily in terms of its bulk, but there's still a lot of DAI out and about in the world. Now, obviously, things are a little bit different now, but if we look comparatively to Binance USD, so Binance USD is third largest stablecoin by market cap, $17 billion. So here we can see that the DAI market cap has suffered alongside UST. Anything that's kind of crypto related and not asset backed, even though DAI is over collateralized and it is asset backed, it's still seen as risky compared to USDC, for instance. We've seen the USDC market cap rising and biting into Tether's market cap, and DAI has dropped by 25%. We had to look at the Masari table to see the historical data for DAI, but looking up here, the peak, March 2022, which really wasn't that long ago. So we can see here that the circulating supply of DAI was around $2.5 billion. Kind of extraordinary for this relatively new stablecoin and what it's been able to accomplish with its very pure adherence to crypto. If we just take a look at the Curve 3 pool, we can see the makeup is still heavily weighted towards USDT. We've got 957 million here in USDT. USDC is 272 million, and pretty much an equal amount of DAI, $268 million as well. And we can see the makeup of all of that. If we go to the DeFi Llama chart, click on DAI, and obviously the vast majority of it is on Ethereum, but it is on other chains as well, on BSC, Avalanche, Phantom, and the others, Polygon as well. And then it becomes fairly meaningless as you go further down. But big chunk on BSC, 261 million, 230 million on Avalanche as well. So let's take a look at the website, MakerDAO. A better, smarter currency DAI can be used by anyone, anywhere, anytime. But that's not strictly true, is it? You'd still need to have a knowledge of cryptocurrency and wallets and everything else. But they call it the world's first unbiased currency. And again, I would challenge that because it's governed by its own token, Maker, and it is possible to accumulate a large quantity of Maker and game the system a little bit, but it's pretty expensive to do that now. But in theory, yes, you could somewhat. The whole idea about DAI is one DAI equals $1, more or less. It does go up and down, but more or less it is $1. So you can see it's just a little bit below $1 at the moment. I think the all-time high is like $1.60 or something, but it wasn't there for very long. But that is, so all-time high, 122. Okay, not so bad. An all-time low, 90 cents. So nothing catastrophic there, but it has regained its peg and it is, bouncing around $1, as it should be, because it's a stable coin. But as we know, stable is a relative term. So this is Maker. They have a growing ecosystem of all sorts of different things, all good. I was kind of shocked when I saw the website because it feels very similar to Tether's website. Same kind of colors, this orangey, bronzy thing, and then the green. It feels very similar to that, very minimalist. And if you compare it to something like Magic Internet Money, Abracadabra, or Frax, it's a very kind of unassuming website, basically. If you want to know where the name DAI comes from, I have tracked it down. This is the creator of DAI. Was looking for a name for it, something short that could be used as a ticker, and came across this character here, meaning to lend or to provide capital for a loan, and then using pinyin, that becomes DAI. So that's it. It means to lend or to provide capital for a loan, which is effectively exactly what happens with DAI. So we can learn all about DAI on the documents here, but effectively what you do is you supply collateral in the form of, it used to be just ETH, but they opened it up to a bunch of different types of collateral, even real world assets now, as we'll look at later on. And you have to oversupply them to then create a loan position through a CDP or a vault, as it's called now. And then they will issue a loan in DAI. So you are taking out a loan in a stable coin, which you will have to pay back at some point. And that loan, the loan itself doesn't earn interest, but the vault has interest applied to it, which you also have to pay back. And then you can use that DAI to do whatever you want with, basically. But this is basically saying to long-term holders of ETH, you don't want to sell your ETH, but you want to unlock the liquidity inherent in that ETH and do something with it, whatever that might be. For a lot of people, they want to just go trading with it or use it to buy more ETH, just to go long ETH, which in a bull market it's a powerful strategy. In a bear market, can really bite you in the ass. So that is basically what you do there. And obviously, like with any loan, you can be liquidated if your collateral falls below the value of the loan itself. So the way it works is you have some vaults. There's a few different types of vaults. There's A, B, C vaults, which basically are different flavors of over-collateralization and the fee that will be applied to that, which is the stability fee, they call it. There is a debt ceiling imposed on the Maker protocol as well as individually on each vault type. So you can't just take out a ton of DAI and just keep borrowing. There are ceilings imposed, and those are kind of governed by the Maker token holders themselves as well. And there are lots of different front ends for Maker, but the main one, the Maker one itself, is Oasis. And here it is. This is the Oasis app. So you can see there are multiply on Oasis and borrow on Oasis. There used to be a savings on Oasis one as well, but that has gone away now. Because there used to be this thing called the DAI savings rate. And this is a way for you to deposit DAI in a smart contract and then earn more DAI on it. But the savings rate now is so low, I think it's 0.01%, that basically it's meaningless now. But it used to be that, that was a key piece of the MakerDAO story. But that has gone away now. So if we click on borrow on Oasis, we can actually have a look here and see all the different borrow collateral types. So these are it's not the exhaustive list, shush. It's not the exhaustive list of collateral you can supply, but this is the featured list. So these are the safe ones, I guess. We've got ETH, we've got BTC. It's actually wrapped BTC. We've got Uni LP positions, Link, Uni, Wi-Fi, Mana, Matic, GUSD, and Curve LP as well. So if we want to take up a position, we can do it like this. We go to borrow, and then we would configure our vault by stating the collateral we want to put in. And we can see here that the type of vault we've taken out is a C vault, ETH-C, which gives us a liquidation fee of 13%, a minimum collateralization ratio of 170%, and a stability fee of 0.5%. Now, the lower the collateral ratio, the higher the stability fee goes up. So the more collateral you supply, the safer the loan is, and therefore the lower the stability fee you're required to pay. But obviously you have to pony up a lot more collateral in the first place, which is not the most capital efficient way of doing things. So that's how you mint DAI. And then when you want to pay it back, you basically pay back the DAI that you owe, and then that DAI is removed from the supply by being burnt. Now, the supply of DAI is elastic, and there are various different ways that DAI can stay pegged to the dollar without being actually physically backed by dollars. So firstly, what they do, they make sure that the collateral in Maker Vaults is worth more than the global DAI debt, and that's the over-collateralization thing. Then also when DAI is below $1, traders can repay their vaults and reduce the DAI supply. And then when DAI is over $1, traders open vaults, increasing DAI supply. And the opening and closing of vault positions by these arbitrage traders directly affects the DAI token supply elasticity. So you have these arbitrage mechanisms, and the arbitrage is not, the bounds between the upper and lower fluctuations of the DAI price are not crazy, and there are bots that can do this for you. But you need to have a fairly large amount of money at your disposal to take advantage of those arbitrage opportunities. Now, we were talking about attestation reports in the last film that we did. An attestation report is basically put together by an accountant. They look at the reserves and they say, okay, you're saying that you have this amount to back the supply of your stablecoin. And we've now looked at your bank accounts, at your reserves, and we can confirm that you have at least enough to cover and complete 100% redemption of the entire supply of your stablecoin. We looked at that for USDC, for BUSD, and for USDT. Whether you trust those reports is dependent on whether you trust the accountant that is delivering those reports. We looked at Grant Thornton, and we looked at the other one that's doing USDT with an... Yeah, that's up to you. With MakerDAO, you don't have to rely on that because everything is on chain. Everything that's in a vault is visible. Now, for you and me, that's quite hard to actually look into by ourselves. But what we can do is go to daistats.com, and this is being created by one of the smart contract developers on Maker. And here we have the entire makeup of the system in all sorts of different languages if you need them. So this gives an overview of total DAI and what's going on. It gives you the debt ceiling as well, the total DAI involved, and then all the different types of collateralization going on, and then the DAI generated by collateral as well. And the overall collateralization ratio is 163%, pretty high actually. So people playing it pretty safe at the moment. $11 billion locked in the protocol. And if you think there's 6.7 billion DAI in circulation, that's pretty interesting. What else do we have here? These are the different vaults. So DAI from ETH A. So you can see the breakdown of all of these. The ETH A stability fee, 2.25%. The ETH B stability fee, 4%. And then the ETH C stability fee, 0.5%. Yeah, lots of different statistics there to give us some insight into what's going on here. And we've got some more exotic ones down here. The GUSD A vault. Other A vault. What else do we have down here? Oh, here's an interesting one. The USDC ETH UniV2 LP position vault. Wow. All sorts of exciting things going on there. And then the oracles. So this is basically when you're in a debt position, you want to make sure that the pricing is correct, because if ETH is priced incorrectly, then you could be liquidated unfairly. So these are the oracles and what the ETH price is being quoted at the moment across all the different tokens. And if you look to the ecosystem, you can see here the DAI savings rate is 0.01%. So not really delivering anything particularly exciting there. And well, if you were looking to generate some interest on your DAI, well, you wouldn't do it like that. One way you possibly would do it, though, if I look here on DeFi rate, so the DAI APR rates at the moment for lending and borrowing, you can lend DAI and get 10% APR, which seems pretty high in this day and age, to be honest with you. And I'm not sure how long that will be around for, but 10% on DAI seems pretty good, doesn't it? Really? So one of the interesting things to look at in DAI stats here is on collateral, we can look at real world assets. So here we have, it's quite hard to understand what's actually going on here, but there's a couple of different real world asset quotes going on here. Centrifuge New Silver, Centrifuge Console Freight, Centrifuge Harbor Trade Credit, Centrifuge Fortune AFI. We've got this 6S Capital one as well. So what is going on here? Well, good question. Well, this is Centrifuge. This is a protocol for allowing you to unlock liquidity for real world assets. So controversially, Maker said we would like to open up collateral to real world assets and bridge them to the MakerDAO system as well. So instead of just supplying ETH or WBTC, you could supply real estate or a car or things like that. So this is a platform for doing that. This is Centrifuge, and there's all sorts of different collateral that you can supply through their Tin Lake platform. This was the announcement. The first real-world loan is financed on Maker. So New Silver became the first to connect DeFi to real-world assets. It's pretty wild, this, when you think about it, that this is kind of CeFi plugging into DeFi and tapping into what they call a multi-trillion-dollar asset class. Well, yeah, absolutely. And this is how DeFi will eat CeFi. So here is Tin Lake, and we can get a breakdown of the different pools we've got here. Gig economy pool, wow. We have, this is the Fortune AFI one, Console Freight. So these are cargo and freight forwarding invoices, real estate bridge loans. So these are all kind of debt instruments or real world assets that have commercial value that can be traded in for DAI or used as collateral for DAI loans. And presumably whatever you want to do with, you could do whatever you want with. This is pretty wild. If we click on the real world asset management, this is the market that pops up. I'm not going to go into that now, but it is pretty interesting to see how these things can be put together and used to take a loan out on DAI. Wild stuff. So the last thing we're going to do is actually open up a vault ourselves, but we're going to do it for free by using our old friend DeFi Saver. So let's go to the app on DeFi Saver. And here you can find a little thing down here. I'll just click that off and simulation. Down here, you've got simulation mode, or you can start simulation here. That will set up a new account. And now we can play with 100 ETH for free to actually do this and sort of wrap our head around what it would be like to take out a debt position on MakerDAO. So we click on the MakerDAO tab here. We want to create a CDP, which is a collateralized debt position, but they call them vaults now. And we can supply ETH to either the ETH A vault, the ETH B vault, or the ETH C vault. So we look at the different options here. ETH A is 145% over collateralization, stability fee of 2.25%. ETH B is 130% collateral and 4% stability fee, or we could do ETH C. Most people, I think, would be doing ETH C. So you need to oversupply by 70%. And the stability fee would be 0.5%. So let's say, for instance, we wanted to put in 50 ETH. That would give us a loan of 36,905 DAI. You see a little button down here which is leveraged. This will automatically take that DAI and buy more ETH with it. So that's effectively going leverage long on ETH. Not something to take lightly, but if you're in simulation mode, you could try that out and see, okay, under these market conditions, this is where I would go long or leverage long on this. And if you saw over the weekend, the market did tip green, and that might have been a moment to do that, but let's just keep it as it is at the moment. And we will create, accept. So that first transaction created the CDP, it's created the vault, and the second transaction created the CDP itself, and there we go. So if we look at the statistics on this position now, I can see I've got 50 ETH of collateral in, I've got a debt of 36,905 DAI, it's looking like, and the liquidation price, $1,254.77. So if ETH were to drop down to here, which, bear in mind, is below the last all-time high of the big bull run from 2017, then I would be liquidated. So I think it's probably moderately safe, but obviously you can add more ETH to your position to top it up if you needed to. But that is how we would set up a CDP using DeFi Saver. It's nice and simple. You could do the same thing on Oasis app, but it's always nice to drop into DeFi Saver and have a look at that. So I hope you enjoyed that whistle-stop tour through the MakerDAO ecosystem and how you actually mint DAI and how it all actually works. It's nothing to be scared of. DAI is incredibly resilient and it's proven its place despite what Kwon might have liked to say. If you have any suggestions for us to cover, I think Frax will probably be the next one that I do, but stablecoins are still fascinating. They still have a place and we will be covering them. I will see you on the next one. Peace out.